You're listening to AI Prism from Seoul Economic Daily.
It's Monday, May 11th. I'd like to share some thoughts about finance daily. So today our mission is really exploring how capital is actually flowing in Korea right now. We're looking at, well, institutions fiercely guarding their capital while retail investors are, aggressively borrowing it. And we'll look at how AI is fundamentally rewiring who gets credit. We're going to take this at a measured pace, so we'll be breaking down all these technical concepts for you as we go.
Yeah, I mean, it is a truly striking contrast. You've got the highest levels of corporate finance playing heavy defense, while the retail markets are just operating on pure leveraged offense.
Right. Okay, let's unpack this. Let's look at Woori Financial Group. They are making a move to absorb Tongyang Life insurance, but instead of just paying cash, which would have been like 350 to 360 billion won, or about 250 to 260 million US dollars, they're executing a share swap. One Tongyang share for 0.252 Woori shares.
Exactly.
Like, a company paying in its own puzzle pieces rather than draining the cash register. But they're taking a 1.19% book value dilution to do this.
Right. Well, if we connect this to the bigger picture, that dilution is a highly calculated trade-off. They're doing it to defend their CET1. That's the Common Equity Tier 1 ratio. It's the ultimate solvency metric.
And regulators care a lot about that.
Oh, absolutely. The FSC, the Financial Services Commission, Korea's main regulator, they watch that metric like a hawk, especially now because the government is pushing this value-up program to cure the Korea discount, that historical undervaluation of Korean stocks.
Wait, so taking a dilution hit actually protects their stability? That seems entirely counterintuitive.
On the surface, yeah, it does. But look, if Woori paid cash, their CET1 drops. A lower ratio means less regulatory room for buybacks and dividends. So by swapping shares instead, they preserve their core liquidity and keep their dividend capacity totally intact.
Ah, okay. That explains why they're also injecting 1 trillion won, which is roughly 700 million US dollars straight into their securities arm.
Yeah.
They're hoarding cash precisely where it generates returns. But, while institutions are fiercely guarding capital, retail investors are doing the exact opposite. They are maxing out unsecured credit to chase the KOSPI rally.
The scale of that borrowing is staggering, really. And it has the Bank of Korea, the BOK, on high alert. Yeah. Especially since household debt is already well over 100% of GDP.
It's wild. Personal credit lines at top banks just blew past 40.5029 trillion won. That's 28.2 billion US dollars. And get this, a massive 715.2 billion won, about 500 million US dollars was added in just 3 days.
Just 3 days, wow.
Yeah, and we're seeing a big shift in leverage too. Young Koreans recently pulled about 10.31 billion won, so 7.2 million US dollars in crypto games. But rather than using that for homes, it's fueling Bit2, which is leveraged retail trading. It's pure FOMO. Is this rotation a major red flag?
I mean, it really is a red flag. The BOK is watching closely because human loan officers simply can't curb emotional market FOMO at this scale. If this continues, they could trigger tighter DSR rules, debt-to-service ratio limits, just to artificially choke off that unsecured borrowing.
So if unsecured retail lending is a growing risk, how do banks safely lend to actual growth sectors?
Well, that's where AI is changing the game.
Right, like OakNorth in the UK. They're becoming the new reference point for regulators here. OakNorth just posted a 165.2 million 209 million US dollar profit, and their loss rate is a near 0.045%.
Yeah, that loss rate is basically a rounding error. They pull that off by avoiding what we call harsh finance.
Harsh finance.
Yeah, rigid, backward-looking credit scoring that only looks in the rearview mirror. OakNorth relies on a forward-looking AI model instead. And this aligns perfectly with the government's push for productive finance, directing capital to actual innovation.
Oh, like NH Nongnate Bank. They recently dispersed 797.6 billion won, about 555 million US dollars, specifically to future tech sectors like semiconductors.
Exactly. It replaces backward-looking spreadsheets with dynamic, cost-cutting risk models. It's really the blueprint for how credit will be distributed moving forward.
It really is. Which, leaves you with a pretty provocative thought. If AI models become the standard for credit, will they eventually learn to predict and price the exact moment a retail investor succumbs to that Bit2 FOMO? That's today's AI Prism Finance Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Won IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.